That's why I think Bitcoin can double from here by the end of January. Now, many people don't expect it because of the 4-year cycle, and that's going to be the big question. If Bitcoin breaks 125 in January, there is no 4-year cycle. Well, crypto's had a rough year. It was actually having a great year until October 10th, because on October 10th, Bitcoin was up 36% for the year, and now it's currently, I think it's like flat for the year. So it lost a lot of its gains. I'm still very optimistic because crypto still has its best years ahead. But crypto should have had a good year this year, and it was on track to until there was a liquidity crisis on October 10th. That was a bigger wipeout in terms of liquidation than any event in history.
The market is sitting in a strange place right now. Stocks just delivered 3 straight years of 20% gains, but instead of celebrating, most people are nervous. Now, Bitcoin, on the other hand, looked unstoppable a few months ago, only to crash hard. Professional investors are not excited. They are cautious. Every conversation seems to come back to the same worries. Are valuations too high? What exactly is happening with Bitcoin? Nobody seems sure anymore. Renowned crypto evangelist Tom Lee is one of the few voices going the other way. While most analysts are calling for corrections and warning about overheating, Lee thinks investors are completely missing what is really happening. He believes the economy and markets have been beaten down by years of shocks, COVID, inflation, tariffs, all of it, and that pressure is about to lift. Lee actually expects a big pullback next year, maybe 20%, but he still thinks markets will recover and finish 2026 at new highs. His S&P target is 7,700, which is solid upside from where we are now. But his Bitcoin call is even wilder. He thinks Bitcoin could hit $200,000 by January. That sounds wild given what just happened, but Lee has reasons, and they are worth hearing out. If you're serious about building real long-term crypto wealth, then you need more than just an exchange. You need structure, security, and smart strategy. And that's where iTrustCapital stands out from the crowd. iTrustCapital is the platform designed for investors who want to grow their crypto tax advantage portfolio while having full control. With a self-directed Crypto IRA or their premium custody account, PCA, you can invest in 80-plus top cryptocurrencies, physical gold and silver, and trade them all 24/7, seamlessly, safely, and simply. Here's why thousands of crypto investors are making the switch. Tax advantages that help you keep more of your gains working for you. 1% transaction fee and no monthly fees, cost-efficient wealth building. Institutional-grade custody that puts asset security first. 24/7 trading access to all supported assets. Multiple funding options. Rollover, transfer, ACH, and even in-kind crypto transfers. Fast setup. You can sign up, fund, and start investing in minutes. And this part is important. iTrustCapital eliminates the slow, outdated, and overly complicated systems of traditional IRAs. No more paperwork headaches. No more friction. Just a clean, easy way to move your money into the assets you believe in most, safely and legally. And here's a great perk for getting started today. When you sign up using the link below and fund your new iTrustCapital account, you'll receive a $100 funding bonus. It's an easy boost to kick off your investing journey. Just use the link in the description to claim it. So if you want your crypto strategy to scale into something bigger, smarter, and built for the future, check out iTrustCapital through the link in the description. It's the platform designed for investors who want to grow, not just speculate.
I think the economy and stocks have been suppressed for the past few years. Part of it is, of course, that we've seen 6 what I call extinction events take place in markets, everything from COVID to the bullwhip supply chain effect as the economy restarted, to the fastest inflation cycle in history, and then followed by the fastest Fed hikes in history. And then we've, of course, had a very controversial administration which put tariffs in place in April of this year that caused a miniature bear market. And then we've even had U.S. bombing Iran's nuclear facilities. I think all of these collectively have made investors very nervous about what I call investing in full risk, because these are what 6 black swans that happened in 4 years. And I think on top of that, we've had a Fed has not really given a green light about monetary easing. And I think the Fed's reluctance has actually suppressed business, quote, animal spirits, because the ISM has been below 50 for more than 3 years now. So I think that's all been a business cycle that has been pretty good, but not one that has been really expansionary. And I think that starts to happen next year. Well, crypto's had a rough year. It was actually having a great year until October 10th, because on October 10th, Bitcoin was up 36% for the year. And now it's currently, I think it's like flat for the year. So it lost a lot of its gains. I'm still very optimistic because crypto still has its best years ahead. But crypto should have had a good year this year, and it was on track to until there was a liquidity crisis on October 10th. That was a bigger wipeout in terms of liquidation than any event in history. The most recent one before this would have been 2022 with FTX. And that wipeout pales in comparison to what happened on October 10th. But in 2022, it took 8 weeks before the smoke cleared, the leverage wipeout was enough in the mirror that crypto prices began to recover. This week is the 8th week since that crisis. And I think crypto prices are beginning to actually recover. That's why I think Bitcoin can double from here by the end of January. Now, many people don't expect it because of the 4-year cycle. And that's going to be the big question. If Bitcoin breaks 125 in January, there is no 4-year cycle. I'm going to give you what we've been able to piece together, and I would say that it's like a 90% correct, because there's going to be 10% you don't know if there was something else. When we look at liquidation events, like in the stock market, 90% of what someone will explain is probably correct, but 10%, like 90%, it would be 90% to correct say that the February to April decline was largely due to the Trump tariffs.
Yes.
But the other 10% would be like, well, stocks were already expensive and they were overdue for a correction. So that's what I mean by 90-10. On October 10th, there was 2 things that happened. One was a triggering event, which was Trump announced, a re-escalation of tariffs with China, like a tripling of proposed tariffs. And because markets were closed, historically, crypto is what reflects reaction to a macro event when you're already after market hours. Like if the S&P was open, crypto probably wouldn't have got punched as hard. But crypto prices fell. Now, crypto prices falling, system can handle that because, crypto is a hyper volatile by nature. So large swings in prices shouldn't really overload the system. And even volume shouldn't overload the system because crypto trades, there's so much automated trading. However, there was an algorithm in place that actually what I call a glitch happened on a specific exchange, okay? Many people use leverage in crypto. I mean, it attracts leverage trading, but people put up collateral so they can do leverage trading. One of the collaterals is stable coins, okay? And stable coins are pretty safe collateral because, hey, if it's Tether, it trades at $1, it's pretty safe collateral. And so you can borrow a lot against safe collateral. And if it was USDC, Circle, that's also a really stable coin because it's backed by $1. However, there was a popular stable coin called USDA. It was an algorithmic stablecoin, okay?
Okay.
And on one particular exchange, because of the shock of Friday, internal prices, like people bid ask of that stablecoin, actually got out of whack. Suddenly, the price went to 65 cents, even though it's supposed to be essentially worth $1. So, but within one exchange, that the quoted price dropped to 65 cents. Well, that meant that all the collateral for every account that used that particular stablecoin to borrow money was now in deficit. Okay, even if it was just $1 that traded at that price, it was already putting every single piece of collateral at risk, into deficit. So then something called ADL was triggered, automatic deleveraging. And so in one exchange, everybody who would use that stablecoin as collateral basically got wiped. Their accounts liquidated. What were those accounts long? They were long altcoins and all these different cryptos that suddenly got dumped onto spot exchanges. So then on all these other exchanges, suddenly some altcoins suddenly went down 99% because there was a lot of selling from ADL, but it triggered a domino effect of all these other exchanges triggering other ADLs because spot prices of all these alts dropped. So that to me was a glitch because it was like an illiquid quote that didn't represent a true VWAP triggered an ADL that triggered a cascade of ADLs. And that led to millions of accounts being literally zeroed out. It won't happen again, I'm sure, because in the future, I'm sure they will use a composite set of prices, or if there's a variance between what's quoted internally versus on spot, or if it's a volume-based measure. So that's why I don't think it would happen again, but that's what happened on October 10th.
Lee's crypto outlook comes at a rough time in the space. Bitcoin started 2025 strong, up 36% by October 10th, and then everything fell apart. What happened that day was brutal. A glitch on one exchange caused an algorithmic stablecoin called USDE to crash to 65 cents, even though it was supposed to remain at $1. That single mispricing set off automatic liquidations across millions of accounts, forcing massive sell-offs that ripped through the entire market. Lee says this was not about fundamentals breaking. It was a technical screw-up that exposed how fragile crypto can be when leverage gets out of hand. He compares it to oil going negative in 2020, something that seemed impossible but happened because of how the system works, not because oil lost its value. The difference now is that crypto has spent 8 weeks cleaning up the mess, the same amount of time it took to recover after FTX blew up in 2022. For Lee, that cleanup is almost over. He thinks Bitcoin is about to break free from the 4-year cycle that has always defined its moves. If Bitcoin pushes past $125,000 in January, the old patterns are done. He knows people see the risks, but he is convinced crypto's biggest run is still ahead. Let's hear more from him.
Historically, when there's a lot of skepticism, stocks can rise. In fact, markets actually peak on good news. They don't peak when people are bearish. Markets peak when everyone's bullish and it no longer responds to good news. Just like markets bottom on bad news. And I think many people are skeptical, but stocks have risen. It doesn't really mean markets are shrugging off the concerns. That's one way to interpret it. My other interpretation is, there is a wall of skepticism. And I mean, maybe that's just it is like, maybe we're just talking about the same sides, just of the same thing. And, but like if someone asked me, is it worrisome? I was a technology analyst in the 90s, so I covered wireless stocks starting in 93, and I witnessed the bubble that was created, a decade in the making, really 2 decades in the making. And by 99, not only was there no skepticism, there was excessive entitlement. Investors were expecting stocks to do explosively, and a 20% upside wasn't satisfactory, and valuations were already elevated and expanding. So I'd say that if I was trying to compare this to the bubble of the 90s, and wireless was a central cast character in that internet infrastructure build, where I don't really see the echoes of that today. In 2020, the price of oil went negative, right? I mean, oil is the most liquid commodity in the world, and it traded at a negative price. These glitches happen in all markets, but it does happen in crypto because it's a gigantic place where people are trying to experiment and create, what they view as free from censorship and interference. But of course, every event's going to bring something new, and you're 100% right. It's terrible that it happened. But again, I remembered oil was negative, and people actually were able to buy negative oil. They were paid to like take oil.
I guess I'll wait for a negative stock price.
I'd love the opportunity to get negative stock. Remember bonds? Corporate bonds had a negative yield in Europe. You were actually paid to own, like an issuer was paid to issue a bond. I think is small caps, because there is real earnings growth now coming, but there is no money flows. So small caps are a whole group that professional investors can afford to ignore because no one else is buying them. You know, the amount of active money in small caps is like at record lows. I think financials are also dramatically undervalued, Scott, because, well, this is where we could be wrong. But in my view, I think the financial sector is actually becoming a tech sector, that as money is becoming more digital and as AI implementations are heavily taking place in financial services, it's going to make it's creating an advantage for the companies who issue capital. And companies like JP Morgan probably, as we just discussed earlier, could really dramatically reduce their dependence on humans, which is their largest expense. So I think financial companies are increasingly going to look like tech companies, and their multiples may become more like tech multiples. So that to me is one group that in the future could have a 30 PE, even though they used to trade at 10 times earnings. I was first called a permabull in 2009. And in fact, it was major newspapers that were using it as a mocking term. Here's what's interesting. 16 years later, what was the right call to be? And yet today, if I had to say what proportion of investors are bullish versus bearish, it's really risen in the last year. In fact, it's kind of close to the 2009 levels. I think people are already betting on the fact that we're in a bear market. Many people were convinced of that in 2022 because of the Fed hikes, and they just never changed their views 3 years later. What made people a lot more bearish is also because President Trump is a very unpopular president. He's a very divisive figure. I'm a registered independent, so I have never tried to let politics be involved in how I view markets, but I can't help notice that I think that political lens plays into many of our clients' views around markets, that they tend to view. When Biden was president, there were a lot of people who were critical of Biden. I thought the economy, I've cared about the economy. I thought the economy was fine. I think the economy's still doing fine under Trump. So that's kept me, I use that as one level of coding that I think has kept people bearish. But, you know, I think America is, as long as it's a place of innovation, and we are because we're at the center of AI, I think it's pretty bullish. But you guys have raised the key point. I mean, there's a chance that this AI is a disaster for labor markets. And if it is, the U.S. will be the least scathed, but everyone's going to go down.
The bullish outlook goes way beyond crypto. The entire market appears to be setting up for a major move higher. The argument centers on 6 major shocks that have hammered investors over the last 4 years: COVID, supply chain disasters, the fastest inflation spike in history, the fastest Fed rate hikes in history, Trump's tariffs, and U.S. strikes on Iran. All of that created an environment where nobody wanted to take risks. Manufacturing indicators have been stuck below expansion levels for over 3 years as businesses stayed too nervous to invest. The expectation is for the Fed to start cutting rates, signaling to businesses that it's time to spend and expand. Added to that is a labor shortage that began in 2018 and will continue through 2035 as a driver of technology spending. In that environment, AI is not optional. Companies need it because there are not enough workers. The comparison is drawn to wireless in the 1990s, when skeptics dismissed cell phones while adoption among younger users surged faster than expected. On the crypto side, optimism remains despite the recent wipeout. Crypto should have had a strong year, but momentum held only until October 10th, when everything derailed. The liquidation event that day was bigger than anything in crypto history, including the FTX collapse, yet the recovery timeline mirrors past crises. 8 weeks after FTX, crypto began recovering, and this week marks the 8th week since October 10th. Bitcoin prices now appear to be turning higher, opening a path to doubling by the end of January. Many doubt this because of the traditional 4-year cycle, but if Bitcoin breaks $125,000 in January, that cycle is no longer relevant. What really stands out about Lee is that he has been called a permabull since 2009. He says he does not let political views cloud his market analysis and sees much of the current bearishness tied to political bias rather than economic data. Lee is swimming against the current right now. Most institutions are holding back. Sentiment is low. But Lee says that is exactly why markets can keep climbing. Markets peak when everyone is bullish, not when fear dominates. Right now, fear is still thick, and for Lee, that wall of worry is what will fuel the next move higher in 2026. Now, do you think Bitcoin will break the 4-year cycle, or is Lee's $200,000 January target just another missed call in a sea of uncertainty? Drop your thoughts in the comments below. Thanks for watching. Please don't forget to like and subscribe.